Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, December 29th, 2024. Hope you guys had a fantastic holiday with your friends and family. And it's been pretty hectic here. So, as I said last week, once we started getting into this time period, I'm just not really a big trader. I mean, I like to trade, but the thing is that I don't really want to throw them out in like to the people that are in the trade room because a lot of these times I'm just in and out, and unless if I'm going to give something out to the people in the room, we kind of have to manage it and figure out how to do that. So I mean, I made a couple small trades, not really anything, and I've been really just trying to enjoy the time with my family and friends, and not really have to worry all that much about what's going on. And one of the reasons why I really don't like to trade during this time period is the volume is not there, and you just get these massive moves in both directions. And unless you figure out that direction usually the day before because we're just getting big gap ups and downs. Uh, you're kind of stuck. Either you're going to chase it to the downside or you're going to risk, catching a falling knife, or if it's heading higher, a melt up. So it's one of the things that, like I said, we had a good year, and I just like to enjoy the time right now. So come tomorrow, maybe, we'll do a little bit, but then after that, we have Tuesday's a half a day, Wednesday's off, Thursday is going to be no volume at all, and Friday's probably going to be the same thing, less volume than that. It may be a little volume because it's going to be really the last trading day of the year, so maybe we'll get a little bit of volatility on that, but when you don't have volume, the tape can be moved in both directions very easily, and you can get trapped in a position and lose a lot of money. So let's just take a look at what's going on. So Friday, we had that big gap down, and it accelerated right through support. This was the big support right here at the 59.64 level. And when that broke, we went down, and you can see. Remember, I've been showing you these support levels on different time frames because they go from different, highs to, I meant lows to highs. So this one's just a short term. This is when we made the low on December 20th, came back up and made the high on the 26th. So just using this, you can see we made it down. Once we took out the 59.81, we came down and tested the 50% retracement, went a little bit lower, but from there, that's where we caught a bid, and we came back up and started testing because what was support is now resistance. So if I'm going to take this, the easiest way to really do it is say, all right, well, this is the line in the sand for the bulls. I meant really for the bears, because if they're going to try and keep it down, that would be it. So let's make this thicker, go 4 and make it red. So this is the resistance line right here. Now, if they possibly, if they can get through it, which they very well could, then what you do is I'm gonna sit there. Well, this is another. I'm gonna give you just all the different resistance. So here you have we have this right at the previous support right here. So the 59.83. If they get above it, here's the bottom of the gap. So we gap down. So this is awfully often used as resistance as well, and that's the 60.05. Now, if we get above it, then you just assume we're going to come up and close this gap. So on the upside, this is what it is. If we could get through, say, this resistance level right here at the 59.83 up to the 59.92, then we're heading up. It's going to be a 10, a little bit more than a 10-point move. This would be your next resistance. If we get through it, then there's really not much until we're going to get up here. So maybe, we could even say down up to the 60.32. So though, if we get above those, you can just play the quick little breakout, play it for 10 points or whatever and go. Now, we don't have any bullish divergences, so that's suggesting that this is just an ABC, and then we come out and take these lows out. And if that happens, that's when we start anticipating that we're going to be heading down to the 59.14 and possibly even down to the 58.77. So If these lows are taken out, this is the next buy zone. And if we take a look at the 60-minute chart, this is just a larger, let's say, low to high. And you can see right here, when we had this drop right here, we made it down to the 62% retracement, rallied back up, and now we're back down again. So right now, if these lows can get taken out, what it's telling us is that we're making a series of lower highs and lower lows. And that's important because we haven't really been seeing that all that much. And a lot of people are thinking the same thing, that this market is just very overvalued right now, and that's one of the problems that the bulls are going to have, is that not a lot of people are willing to put money into work when you have the PE on the S&P close to that it's only been at this level, I think, maybe 4 times. So they're going to have a hard time trying to get new buyers. So on the 60-minute chart from here, we didn't have any bullish divergences, even though we got this move here. Now what happens is, if we take this out, there's a shot that we could form some bullish divergences, but it still has a ways to go to get down to the 5850. So you can see right here, as far as resistance wise, it's going to be these the moving averages that are converging right here, and that's going to be right around that 59.85, which also coincides with the resistance that I'm talking about. So these are the levels there. We're pretty oversold on the 60-minute chart, but I'm kind of up in the air. Like I said, if they try to move the tape higher, I'm just going to watch these pivots and see how things play out. And if they get above here, you can just take a quick long trade and just take it as a scalp. So on the downside, if we take these lows out, then we're looking at a test down at the 5900, which is this low, and that's the 50% retracement, as well as price support. So this is going to be an important line. So let's mark that, and I'm going to take it and go. This is, oh, sorry, hang on 1 second. Okay, so this right here. Now let's make it a green, because this is support level. Hang on, and we're going to go green and go 4. So this is going to be important for the bulls to hold, because if they lose it, then we're coming back down, and we're going to come down to the 50% retracement. So actually, I had that mixed up. I'm sorry. Basically, this would be where it is. So this is the important support level. If they lose it, then we're probably coming all the way back down to the right around that 58.50. So these are the support levels. We already know the upside ones. We're on the 60-minute chart, like I said, oversold, so it's turning up. But if we look at the daily, this is where things get a little dicey, especially if you're kind of permanently on the bullish side here. And I'm not saying that it's wrong, but just this size move is enormous. Going from the 2022 lows to these highs, and you can see we have the bearish divergences, and just a 23% retracement brings us down to 54.82. But with this type of move, you would expect at least a 38 to 50% retracement, which is now has us looking at the 47.90. So I would be, even though I think when we get the dip, nothing goes straight up or down. And if we get a dip, you can sit there at support and try a nice, long trade. That's gonna, probably bounce 200-300 points. But you want to look at the resistance part, because at some point we're going to come down and we're going to test these. I do believe that. I think, as I said, a lot of people are, especially the big money, are looking at the market as very, very overvalued. So it's going to be difficult to get a lot of new money coming in, and these areas could be an exact magnet on it. So that would be the downside part as far as support wise. And you can see even 55.53 is just a 200-day moving average. So last time we tested that was in August, and then from there we got a nice bounce. So here, we can say this will probably be the first support level, right around the 55.53, or down to the 54.82. So this would be support right here. So right now, I'm at going into tomorrow. It's We really could go either way. I think we just need to see the open on it. If we gap up, these would be the areas that I'm expecting the bears to show up. If the bulls can get through it, then we're coming all the way up and probably going to close this gap. Now, if the bears can take out these lows, and then here's the the lows that would be right after it, then we're coming down and we're going to be testing the 59.14. So we're kind of neutral on the 15-minute chart. We don't have any bullish divergences, so that is suggesting that these lows will be taken out. But let's just see what plays out tomorrow. See how we open, and from there, I'll let everybody know in the trade room what I'm planning on doing. So with that, enjoy the rest of your weekend, and I'll talk to you guys.